It is May 29, year of our Lord 2024, and I'm Jim Munchback, CEO and founder of Bayrock Financial. I did a market update yesterday and tried to make it go live here on LinkedIn, and it didn't work. We had a pretty big unexpected storm yesterday. Everything went black, had lots of trouble with the technology. And when I have trouble with technology, I have a lot of trouble with technology. So, anyway, wanted to go over a couple of basic things that we discovered in the market last week. Higher for longer is the first big topic. Looks like the Fed is talking about keeping interest rates higher for longer. So that's kind of not great news. And deflating sentiment as a result of those higher inflation numbers that keep coming in and the resulting higher for longer Fed stance. The economic indicators are deflating a bit. We'll talk about that a little bit. And oil price slides. So the oil prices are sliding, or did slide last week about 2%. We'll talk about that for a minute. And let's see, I'll even take a look at a couple of charts here that are kind of interesting. Interest rates are up, and these charts aren't working for me right now, so I will come back to those in just a minute. But for now, let me just jump in and get with the program. So the first thing I wanted to highlight in this market update is that the S&P last week was pretty flat. We'll look at the chart today. And in fact, that's one of the charts I wanted to show. Let me see if I can show you that chart. This is just the S&P 500. You can see that that's a year-to-date chart, but you can see that the S&P 500 is pretty, it's been pretty extended. It's been on a pretty good uptrend. So that's one of the things that we're looking at. S&P was flat last week. It's down a little today. And NASDAQ was up last week, 1.4%, which is kind of what we've come to expect. And the Dow Jones was up last week, 2.33%. But again, today, as of Wednesday, 28 May, it is down a bit. So let's take a look at the mixed up markets is really what I titled this market update, because the markets are mixed. They were last week, but they were mixed mostly up. So mixed up markets, that's my title. Higher for longer still, that's what the Fed is talking about. Their minutes came out last week, and when we took a look at their minutes, we found that the Fed and those folks who are speaking for the Fed are indicating that they're willing to go higher for longer in terms of tightening. They're willing to tighten the markets, liquidity in the markets longer, and keep interest rates higher for longer. So they've got a 2% inflation target, and that's their mission, to try to keep inflation under control. And the numbers just keep coming in hot. And so the Fed is going to, at least for now, keep higher for longer. And again, that is deflating the sentiment, the economic indicators for unemployment, the unemployment rate. According to the Consumer Sentiment Survey, unemployment rates are rising. And interest rates being higher means prices for consumers are higher. What that does is reduce consumer spending. In our economy, if the consumer's not spending, then the markets are going to feel that, and that will show up in our portfolios. So that's something we're keeping a close eye on as managers of money at Bayrock. So hopefully that helps. Again, oil, the price of oil slid 2% last week. Now, Monday, it was up 1%. Today's Wednesday already. I can't believe. By the way, I hope you had a great Memorial Day weekend. I did say that in my live stream yesterday, but it got cut off. The whole live stream got cut off yesterday because of the storm. I hear some thundering out there now, but as well. Uh, but oil prices did slide a couple percent last week. And then Monday, while the market was closed for the Memorial Day holiday, it was up. Oil was up 1% in the futures market. And then uh, yesterday, Tuesday, and today, well, yesterday, oil was up another 1%. So 1% up on Monday, 1% up on Tuesday, and then today it took a little bit of a breather. The average price of gas as of last week was $3, and I think it was $3.59 a gallon for unleaded. And again, that volatility in oil is due to those interest rates staying high, and that's going to affect not just the asset class of oil and energy, but every asset class will be affected. In fact, well, I can't show you the chart right now because something's wrong with my little app. But if you have any bonds, as we do in our portfolio, those bonds, any asset class that's bond related, is being hammered. But I expect it's going to turn around, and it's going to turn around with some velocity when interest rates start to come down. So inflation and GDP data is going to be coming in, even though this will be a bit of a slow week. A short week, rather. It won't be a slow week. There'll be lots of data this week. And the probability for rate cuts, according to the folks who make those predictions, is 49%. So 49% for rate cut probabilities in September. That's continued to be pushed out. And the Fed has kind of made a 180. They were talking about rate cuts. That's all they were talking about. And now they're talking about higher for longer. And that's a pretty big flip of, their thinking and their speaking. And that's what we're watching. So key takeaways, those were the key takeaways. The main thing is that the Fed has had a 180-degree change in attitude and language and wording on what they're expecting to do, which is keep rates higher for longer. And FOMO at the bottom line. What I wanted to say about this is FOMO, fear of missing out. I have expected this market to get a significant correction for some time, and I've had that expectation many times over the years. And that expectation goes unfulfilled quite regularly, especially when the Fed is pumping liquidity into the markets at rates we've never seen before. They're printing money, and that's creating inflation. It's creating lots of liquidity in the markets, and it's causing the markets to go up. And so, as an investment advisor, as someone who manages money, as someone who has money to manage, the fear of missing out is real, and we want to be in the market with measured risk precautions, and that's what we're doing at Bayrock. So I hope that's somewhat helpful, but it is a bit of a challenge. One thing I wanted to say before I let you go and turn off this little recording device. We are live streaming to LinkedIn. I love LinkedIn. If you're connected with me on LinkedIn, if you would do me a huge favor when I do these live streams, if you like what you're seeing, just comment. Just a quick comment would be really appreciated because we're trying to get the algorithm to notice when we go live on LinkedIn. So we're live right now. There's no editing. If that's something that you think is cool, I think it's cool. It took a lot of work to get to the point where I could just do a video with no post-production editing. And this is like my third one. So if you would comment, if you're a friend of mine or we're connected, that would be really appreciated. So yeah, we're on LinkedIn. And also I wanted to mention that this is being live streamed to my YouTube channel. It's new. My YouTube channel is new, at Jim Munchback. And Munchback still has an H on the end. So if you have an opportunity to subscribe and like the video and leave a comment, that really does impact the algorithm, which makes these videos and these live streams be available or at least recognized on the timelines of folks who use these platforms. So I appreciate that. And that's pretty much all I have to say for now. I'll see you in the next market update. I'll try to do one of these every couple of weeks. When I was a financial advisor at Morgan Stanley on Wall Street in the wealth management department, we had this. We had some really smart people. We did a lot of research at Morgan Stanley. And one of the things we did is when the market was up or down 1%, when there was a 1% move, we would go not we, but the team would post their comments. What's causing the market to go up or down? And I expect we're going to see some volatility in the months ahead. And so when that happens, when we have some updates that are relevant, that are helpful to help folks understand what's going on in the markets, I'll jump on here and do a quick live stream and just share what's going on in the markets. So these market updates are just supposed to be a quick, fun kind of bullet point thing. And I've already gone on 11 minutes, which is way too long. I'll try to keep it to 5 minutes or so. But anyway, leave a comment. Tell me what you would like. If you have any specific needs, wants, or wishes, and if you have questions about your financial plan or your investment management strategies, then hit me up. There's a link to my calendar in the description, and there's also a link to the post. When I do one of these live streams, I always do a post, and that's also that link is in the description as well. So thanks for watching. I am now going to hit this little button on my Stream Deck. I have a Stream Deck here. Let me just show you. That's a Stream Deck. And if I use this little button right here, I can make some cool noise. So yes, I have all these cool little tricks and tools, but I'm going to hit this little button right there, and that's going to end this broadcast for